Good evening and very warm welcome to all the participants on the Shalby Ltd Q4 FY18 earnings call. Today we have with us Dr. Vikram Shah, Chairman and Managing Director, and along with the senior management of the Shalby Ltd. So I hand over the call to Viral. Over to you, Viral.
Thank you, Param, and we appreciate you and LRR Securities arranging this conference call. We have good afternoon, good morning, good evening, everyone, wherever you are. Today we have with us Dr. Vikram Shah, Chairman and Managing Director, Sri Ravi Bhandari, CEO of Shalby, along with the management team to share highlights of our operational and financial results for Q4 and also for FY3 2018. We will be uploading the earnings presentation latest by tomorrow. And already we have uploaded the earnings on the relevant websites of NSE, BSE. Without further delay, I hand over this call to Dr. Vikram Shah.
Dear friends, as this is the first teleconference we are doing it for investors, I would like them to know a little bit about Shalby. As far as Shalby Hospitals is concerned, it is a 25-year-old concern. This is the 25th year in running of our hospital as a business. And this is what I started after coming back from United States. And for 15 years we were operating in a smaller place. But then since last 10 years we are operating in a corporate, which is a main hospital at Qtr4 Club, Ahmedabad. In last 10 years, we have grown from one hospital to 11 hospitals, from 200 beds to 2,000 beds, from top line of nearly 30 crores to 300 plus crores, and EBITDA from 1.80 crore to nearly last year, this year we finished at nearly, total EBITDA is about 93 crores. So we had been growing well, we had been working hard. And as far as coming 10 years of healthcare are concerned, India has a lot to do, and that is what we see as a very large opportunity. Tier 1, 2 cities don't have enough infrastructure. We have created a huge middle class. We are going to create even further large middle class, and they want good treatment for their parents, for their kids, for delivery of their wives. And this good infrastructure is not available everywhere, which we are trying to create in a way that it remains affordable, and we are very well known for having our operating costs minimized so that our EBITDA margin has always remained well. Even year on year, with this good growth, more than 30% in last 11 years, we have not reduced our EBITDA margin. So this is our hallmark, that we are very efficient in doing our work, and that's why we are able to do this very nicely, and that's why we were able to grow also, because we were able to put our money back and invest. As far as last year is concerned, it was a very eventful year for us. After successful IPO, and 3 large units we have opened, and from this year they are within 6 months to 8 months they have become nearly EBITDA neutral. So by 2 to 3 months from here they will become EBITDA positive. This year, coming year, we are going to have heart transplant tie-up. We already did it. Very large and reputed liver transplant team is joining our units, so they will be working all our units for liver transplantation. Recently, we have been working with cancer and oncotherapies and oncosurgeries and radiotherapy, and leading oncophysician of the world, Dr. Purvish Parikh, has joined us. And under his leadership, we have started, and actually it has started growing very, very well. Now, this year and further 10 years, what I see is that healthcare will grow at 15 to 18%, which those data is available anywhere, everywhere. But the efficient people who use capital efficiently and who have good margins, they will keep on growing at much larger rate than 15-18%. So now I would like to hand over this to our CEO, who would talk more on numbers.
Good afternoon to you all. My name is Ravi Bhandari, so thanks for being on the call. I'd like to start with sharing the information on the capacity expansion which your company has undergone in the last year. Like from a 1,200 plus bed capacity, the company is now 2,000 plus bed capacity, so there is a 60% growth in the capacity which has got added in the last year. And also with this, the construction risk for all the hospitals which were there under construction has got mitigated, and the hospitals have become operational. In the last year, we opened up 3 large units, one each at Surat, Jaipur, and within Ahmedabad, a 250-bed unit in the Naroda area of the city. On an overall basis, the occupancy numbers for the company have gone up by 23%. The IP count also has shown a significant increase with the new units becoming operational, whereby we see a 33% growth in the IP count. Similarly, the trend in the outdoor patient count, the OP count, has also been positive for the company, and we have seen a growth of 34% in the outdoor patient counts. Another good thing which has happened during the last year is with more number of units coming up and with we expanding beyond Gujarat or Madhya Pradesh where we were, we have seen a good growth in all the specialties coming in. We being a very strong brand in orthopedics, there has been traditionally a skew towards the orthopedics revenue, but as we are expanding, as we are going out to the newer territories, we clearly see the mix changing very rapidly and all the other specialties contributing significantly. Talking about the broad numbers for the year, the overall revenue growth your company has achieved is 19% as compared to the previous year, FY17. Also, I'm happy to say that your company has achieved a growth of 16.5% in the overall EBITDA numbers. Few developments I would like to share with you all, which have happened in the last year, is that we have started our 2 radiation therapy units, one each at Jaipur and Naroda in the Ahmedabad city. So with this now we have got 3 radiation therapy machines, and the 2 new machines are already in the first 4 to 5 months. We see a load factor of 20 to 25% coming in on those machines. So with this thrust on this oncology, as our chairman had said, that we have associated with us a very leading onco physician of the country to give a fillip to the overall onco section, onco specialty for us. Also, in the last month, we have entered into in the month of March, we have entered into an agreement with a hospital in Cambodia, whereby our doctors will be starting the outdoor patients. Now, we have been attracting a good amount of medical tourism, but it has been largely from the African continent or from the Middle East. So, from that perspective, getting into Cambodia is significant for us because it is a newer territory which has got opened up, and we expect significant contribution coming in from there. Also, we have tied up with a leading player for heart and lung transplants. Now, we have been doing the organ transplants. We have been doing kidney transplants. For the liver transplants also, we have the right setup. Heart and lung transplant is something which requires a much broader expertise, and that is where we are tied up with one of the leading players so that without wasting much time, we can really get this program kick-started at our various units. Also, there is one development during the last year which I would like to share with you. In the last 2-3 months, this development has happened, whereby the government of Gujarat, and Gujarat being our, we being based out of Gujarat, and we having a good number of hospitals in Gujarat, so definitely this is of significance to us. Our main specialty, which is the joint replacements, the government of Gujarat has announced support of rupees 40,000, which is equivalent to around 25% of the cost of joint replacements to those patients who otherwise are not able to afford the joint replacements, and in their lifetime probably otherwise they would not be able to go for that surgery, which is of course an elective surgery. So we do expect, and we already started seeing good numbers coming in through that scheme as well. So that was all on the overall performance of the company, on the overall numbers. And now I'll just hand over to our CFO to talk about the numbers further.
So during Q4, we achieved historically highest numbers in terms of top line, thanks to our 3 new units at Jaipur, Naroda and Surat, which got commissioned. So all these units have contributed to our top line, but at the same time, EBITDA had been little subdued for our launch expenditure, the inauguration, and then for branding and marketing of the new units. So we have spent additional 2.72 crores for advertisement and publicity as compared to last quarter, corresponding last quarter. And now we are open for the specific questions you may have.
Param, we are opened up for the questions and answers, please.
Yes, thank you very much. We will now begin with the question and answer session. Participants who wish to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Chintan Sheth from Samiksha Capital. Please go ahead.
Thanks. Hi. Thanks for taking my question. Sir, can you explain the subsidiary part wherein what we are seeing from the press release is our cost of operating cost for full year has been at a standalone level is higher compared to consolidated number. So it implies that our subsidiary is actually, we are knocking off some expenses from there, which resulted in lower consolidated expenses, while top line remaining the same, more or less.
Yeah, true. So we have 4 subsidiaries, and one of the subsidiaries is Griffin Medical Equipment, which is our sole buying agents for various medical, surgical consumables. And we have imparted by European agreement 3% margins to them. So when we are consolidating, that 3% margin has to be eliminated.
Okay, so the subsidiary...
It's a differential between... Yeah, so it's a difference between their actual purchase cost and sale price to us. So that margin, I cannot make money out of myself. No? It's putting money from one pocket to another. So we as an accountants, we eliminate this.
But the cost is being accounted in operative expenses or cost of goods sold?
No, so sir, how it happens is, say, cost to Griffin had been, say, 97 rupees. They were selling it to us for, say, 100 rupees.
Right.
So their cost was 97, so I will pick up cost of 97 only.
Okay.
And I booked purchase of 100 rupees. So technically that 3 rupees purchase which I booked extra, we need to eliminate. And this is elimination from the expense side. Now corresponding elimination would be from revenue side also. That 3% margin Griffin was keeping for 97 or 100 rupees difference, that gets eliminated.
That will be
both the things
in the revenue. It will get knocked off because of the inter-segment, and expenses gets knocked off because the consumables are for internal purpose only, standalone level.
Correct, sir.
Okay. And we are accounting it at operating expenses, not in cost of goods, solo consumables.
Yeah, so operating expenses consist of our material consumptions, doctor's payout, and our security, attendance, housekeeping, and all those, which relates to operations.
Right. Okay, now coming back to the operating side, how in Q4 and full year, can you provide us the operational beds number, AOLS number, ARPOB, and so on and so forth for Q4 18 and FY18, if you can?
Yeah, so for Q4, the bed capacity as compared to last year, that has from 1,265 it has increased to 2,012. So, by setting up all these new units, bed capacity has increased. Operation beds has increased from 781 to 1,100. Average length of stay has reduced, which is a happy situation, from 3.9 days to 3.6 days.
Mm-hmm.
So we are holding the patients for lesser number of days. We are discharging them pretty faster. And occupancy has increased from 253 average to 396. There's a rise of 56.52%. And inpatient count has increased from 5,818 to 9,998. So that's a 71.85% rise. And outpatient count has increased from 42,060 to 64,189, which is 52.61% high. And ARPO has reduced from 36,941 to 30,625, which is around 17% less. But it's thanks, our new units where we have promotional packages and all, which attributes to this, and then our units are geographically diversified, where we do not earn the same ARPO. At the same time, our capex per bed also is less in those places, like Jabalpur, Indore, and all these places which we talk. So this is about the operational data.
So this is for Q4, right? This number?
Yeah, so Q4 ending and year ending is coinciding, so it's on 31st March 2018.
Okay. And if we say our ARPOB has been declining because of the geographical spread to low-cost cities, basically. So does our cost also gets adjusted accordingly, or
no? So there is two elements to this. One is our promotional and marketing efforts, where we purposefully keep the rates low, packages cost low for inviting more patients. And another is the geographical diversification.
Right. Yes, definitely the input cost also is lower in these cities.
Right. The operative cost will be lower, that salaries will be lower, doctor salary as well as support staff salaries will be comparatively lower than what we are spending in Ahmedabad main centers.
That's right.
Okay. And sir, how are we planning our plans for Mumbai? There were two hospitals coming up, two hospitals in Mumbai and one in Baroda. What are the updates of the same?
Yeah, so for Mumbai, the two hospitals, one is in Qtr4 and second one is in the Santa Cruz. Qtr4, there is a small 50-bed unit which is already operational, and just adjacent to that, we are coming up with another 90 beds. In fact, our partner is constructing that building, and he will be furnishing it completely, and we will be managing that setup. There the overall construction is done now, and we have started with the MEP services. So it's going to take another 8 to 9 months before that additional 90 beds get operational. Talking about the other unit, Santa Cruz, there we have the Asha Parikh Hospital. There we are in the drawing stage right now, and once the drawings get finalized, simultaneously we are applying for various permissions, and that is where we expect the project to go up to around 30 months.
Okay, from now?
Yeah, from now.
Okay, and what about Baroda, sir?
Yeah, so Baroda again is on the drawing stage, and we have started applying for the permissions there.
Okay, and what kind of bed capacity we are looking at both at Santa Cruz and Baroda?
Yeah, so Santa Cruz is going to be around 175 beds, Baroda is going to be around 140 beds, and Ghatkopar is going to be, both the units put together is going to be 140 beds, 90 plus 50 which is existing.
50 already operational, right.
Yeah,
and sir, can you provide the total bed strength at Surat, Jaipur and Naroda? You mentioned 250 beds. So, what is the bed capacity at Surat and how much is it operational now?
So Surat is 200 plus beds, and the operational beds are in the range of 70, whereby we have now we are going, the occupancy rate is 35 numbers.
Mm-hmm. And Jaipur?
Jaipur is again around 250 beds capacity, and there again we have opened up around 80 beds, and the occupancy is in the range of 30-35.
Okay, and Naroda 250 bed capacity, how much is operational?
So similar, because all these three hospitals, they got started almost around the same time. So, and as a philosophy, as a policy rather, we open up in segments. So all these locations around 70 to 80 beds have got opened up.
Okay, and in this 2,000 bed capacity, we haven't included the Santa Cruz as well as Baroda units. No, these
new units which are going to come up have not been included.
So it will get.
And we are actually happy to take these questions, and we can take more as well. But if we can take it more offline, because otherwise the others will not get a chance.
Sure, we will like to get in touch with you and meet you in person, sir.
Sure, you are welcome.
Yeah.
Thank you. The next question is from the line of Pritesh Chedda from Lucky Investment Managers.
Please. So what explains the drop in margins in Q4, from, about 25-26% to about 15%, if you could give some highlight there. My second question is, you gave the IP count growth and the OP count growth. If you could give the surgery growth number for FY18.
Yeah, so I'll first talk about the margin part, because see, we have got these three large units which have got operational in this last few months only. So there is a negative contribution which has been coming in from these new units, which has contributed to it. But at the same time, the good part is that now we have been seeing, like April also, if we look at, we have been out of these three new units, 2 units we have been seeing in the EBITDA neutral levels. So we do expect this to be becoming EBITDA positive very soon. Talking about the surgery count,
just a minute. 3 units, which are these units? And these are all what, brownfield, or these are completely new units which have come?
So these are completely new units which have come. These are Surat, Jaipur and Naroda in Ahmedabad.
What is the capacity of the beds?
So bed capacity for Surat is around 215 beds, for Jaipur is around 257 beds, and for Naroda is around 250 beds.
So which means about 722 beds have come up, right?
Yeah.
Earlier when you had 1,200 beds, what was operational, and now when you have 2,000 beds, how much is operational? For us to understand the impact of these new beds which have come.
Yeah, sure. So the operational beds, basically it will not really depend on whether it was, what was the number at 1,200 or what is the number at 2,000, because that's a parallel exercise which keeps on happening at different units as per their different maturity profiles, and we keep on adding up the operational beds there by opening up more wings or floors as and when required, or as and when the situation demands.
Perfect, sir, but there would be some, when you say 1,200 beds, that's your total capacity, right? They may not be operational. When you are saying 2,000 beds, it is total capacity. It might not be operational, right?
Absolutely. See, the operational beds, operational beds as of now is 1,265, which earlier used to be in the range of 700 to 800.
Perfect, sir. 700 to 800. It should be 1,265 minus 722, right? 540.
Sorry? No. 722 is the capacity addition we are talking about. So capacity addition of 722 brings the total number of beds to 2012, and the operational beds will be the units or the areas which we are making operational from time to time.
Okay, so basically 722 gets added to your total bed number, and what is added to your operational bed number is about 500 beds.
Exactly.
Okay. Now
and also the occupied bed numbers, like it's a relevant thing, so let me talk about that as well. So we had given out these numbers like 2017, the total average occupied beds throughout the year was in the range of 250 plus. In the year 2018, it has gone up to close to 400, little less than 400. And as we talk now,
what is average occupied beds you are saying?
Sorry?
What you mentioned, average occupied beds.
Occupied beds, yeah. For the quarter ended 31st March, it has gone up to less than 400, and now it is hovering in the range of 425.
Then what do you mean by average occupied beds now?
See, today the occupancy at one location may be 100, tomorrow it may be 90 at the same location. Similarly, all other locations, the occupancy numbers vary. So we take an average of month or the quarter, or ultimately the year.
Let's say for Q4, you did what, 1265 into some 0.30 or let's say 35% occupancy, brought you at 442 beds, 440 beds. That's what you did to find average occupied beds? You have 1265 operational bed into occupancy factor gives you the average operational beds. That's how you calculate it?
No. See, number of beds which are occupied at a particular hospital on that particular day, which we count as the midnight occupancy for the particular hospital, is the number of occupied beds for that particular unit. Now,
perfect. So it means operational bed into occupancy ratio, right?
So operational bed is overall count, and occupancy is the number of occupied beds which we are talking about on an average basis for the month or for the quarter.
Okay, I understood, sir. Okay. And what is the surgery growth number for FY18?
Yeah, surgery numbers I think we'll have to come offline because I don't think we have it right now available.
I just want to highlight here, when I was looking at your DRHP, your surgery growth was flat for a couple of years or 2-3 years, which means whatever growth you have shown in the last 3 years is a function of price growth?
So it is a gradual growth in the number of surgeries which has been happening, and that is where we had also seen our units here in Ahmedabad getting matured or coming to closer to the maturity, and that is where we had felt a need for expansion a few years back, and we had embarked on this expansion plan. And now with these new units coming in, because we had realized that we need to expand to overall increase the overall volume of work. So with the new units coming in, the number of, as we talked about, the number of OP count, the outdoor patient count, the indoor patient count, the growth numbers which we talked about, that has been coming because of our expansions which have, the new projects which have got commissioned in this last year.
Okay. My last two questions are on outlook side. Now, when we see the margins this quarter, after your capacities becoming operational, they have come down, which means that what we are seeing for the last 5-6 quarters were margins on more matured assets, right? So matured asset margin looks like some 23-24%. Is that the margin number which one should look at for matured assets of your or matured hospitals in your bouquet on a steady state basis, or there is a margin driver over and above this number? So if you could give more sense on margins for FY19 as a whole, and also on the matured assets. That's question one. Question two is, what's your outlook on the growth for FY19?
Our two old mature units are throwing 36% EBITDA margins, not 23, 24. And these are all two Ahmedabad units are throwing 36% EBITDA margin. Jabalpur and Indore have started throwing 10 to 12%. They will reach up to 25, 26 or 24 maybe. And the Naroda, Jaipur and Surat will start throwing EBITDA this year. Last quarter, the negativity of these three new units reduced our fourth quarter numbers, but now they are being positive. And we will be having a much higher EBITDA margin than what we had in last quarter. Jabalpur and Indore, as the occupancy is ramping up, it will go up to 23-24% maybe 20%, we don't know. But it will go about 20% this year, it looks like. And Ahmedabad units, 2 units which are 5 years plus, they will keep on throwing 36% year on year. As far as these Jabalpur and Indore are concerned, they are 2.5 years, so they are not mature units, they are semi-mature units. They will be doing well. And these new units, one Mohali, which will start this year, so that will start throwing nominal EBITDA this year. But the Surat, Jaipur and Naroda will be throwing between 5 to 10% EBITDA this year.
So, sir, should we look at your business model? See, Ahmedabad, the 2 units which you're referring to are exceptional units making exceptional margin, and other units should actually make a certain number which is about 22 to 24%, or even these units which are coming up should also make your exceptional margin of 35-36% eventually. How do you look at the model?
Well, these are 2.5 years old units. So, unit gets mature at 5 years. So we might get some good numbers, about 30% after 5 years. But, sorry?
This is possible in Surat, Jaipur, Jabalpur.
Yeah. See, margin is a product of time in hospital industry, and after 5 years, if you are making good EBITDA in first couple of years, you can do very well after 5 years.
Okay.
See, in hospital industry, one need to understand that it is easy to fill up the beds and difficult to make money. This one need to understand, and no hospital is empty today, but nobody makes money. It is like airline industry, where load factor of all top airline is same, but the earning is not same. They have same rule of game. So, basically we ramp up slowly so that we do not incur wrong costs, and we are able to earn more for a given money.
Lastly, on the operational, so you said Mohali will also come up this year. So what I see in FY18, or let's say in Q4 of FY18 alone, there is an increase of about 60% in your operational bed number. So, it's a 1265 versus 765, right? What is the increase in operational bed number next year?
Well, one more question you asked last, I forgot to answer. Yeah. So what is the outlook for 2 to 3 years to come? The outlook is very good, as this Pradhan Mantri Yojana is coming and other things are coming up, and with this we will be able to ramp up our capacity faster and in a much better way. So in 2 to 3 years time, we should be able to fill our beds very nicely.
Well, to your question of how the operational beds will be ramping up, so what happens is that we are not putting any numbers to it right now, but the trend which we have seen and which has been there with us for our hospitals which have got commissioned is that the first year occupancy numbers for the particular hospital is in the range of 15% of the beds. Second year it goes up to around 25 to 30%, and then 45%, then 55 to 60% fourth year, and then around 65 to 70% in the fifth year. So that is how the trend has been going. So the number of operational beds will be a factor of which hospital is how old and which hospital is doing how well. And basis that will keep up opening the beds. But for sure we have created this capacity of 2012 beds. So this is the potential which we have on our hand at this point of time. And if we have opened up only 1,200 odd beds at this point of time, so we still have 40% of the capacity to be opened up. Can we move on to the next question, please?
Yes, thank you. The next question is from Rohan Dalal from BNK Securities. Please go ahead.
Thank you. Hi, sir. So I had a couple of questions. The first one being about the Surat, Jaipur and Naroda facilities which you've mentioned already. I just want to know what was the ARPA about there, and what what kind of case mix is going to be focused on at these facilities?
So these are pretty new units, and as our CFO had pointed out that there are some promotional offers which are there in the beginning, but still in spite of all that, the kind of ARPOB which we have been able to manage at an average level is upwards of 30,000 rupees, and Jaipur and Surat units have been giving an ARPOB of 27 to 28,000.
Okay, so thanks. And my second question was in regards to the knee implant caps that the government has imposed. How much of a haircut are you guys, is the company still experiencing in terms of margins?
Well, we had that effect in our second quarter, and after that we were able to get it mitigated.
And how much was the effect, sir, in the first half of the year of FY18?
About 3 CR? 4.90 CR.
Okay, thank you, sir. And on to my last question. I wanted to know about your receivables. If I see your DSO has gone up to 60 odd days from 40 days, which is quite substantial compared to the industry average of 30 odd days. So, can you just throw some light on your receivables, please?
Yeah, sure. First of all, I'm not sure whether the industry average is at 30 days, but yes, for sure, our average outstanding has gone up. The DSO is in the range of 60 days, and that has happened because our newer units and the semi-mature units also of Indore and Jabalpur, which once we got the NABH accreditation there, then when we went for empanelment, with all the schemes and all those things happened almost simultaneously. So what happened is that the patient's contribution from all different schemes, they came in at the same point in time, and that is where the credit billing had gone up. But there is a good control which has come in there, and the DSO is now coming back under control.
And so how much of your payee profile is scheme-based patients at this point of time?
So, just 1 second. 60. 1 second.
Sure.
So 6. Yeah, 1 second.
During last 3.5 months, what has happened that our insurance arrangements with CPM, those are sort of cartel by the government company.
Hello? Yeah, sorry. I'll just come to the straight answer. So around 60% is from the self-pay. There is another 21% contribution from the insurance patients, and balance are from different corporates, which includes your CGSS, ECSH, ESIC, etc.
Okay, so and is there any of your facilities have an, let's say, a higher than average amount of scheme-based patients? Any of the facilities that report 30% EBITDA margins especially?
Sorry, your second point, can you please repeat?
Yeah, sure. So, amongst your facilities, do any of the facilities have an abnormally high amount of scheme-based patients, especially the facilities which report 30+% EBITDA margins?
So, yes, because the numbers which were given you, 60% self-pay and 21% insurance and balance others, definitely is an average of all the units. Yeah. And there will be units like Jabalpur, etc., where it will be little higher. Just 1 second.
Well, Krishna Hospital in Ahmedabad is having a 36% EBITDA margin, and it has scheme patient of MA also, and CGHS also, and ECHS also. And still we are able to have more than 30% EBITDA margin.
Okay, so thank you so much.
Thank you. Next question, please.
Thank you. The next question is from Manish Santalia from Motilal Oswal Asset Management.
Yeah, thanks for the opportunity. Dr. Shah, I just want to have one understanding from you. I mean, how many beds do you aspire to have in the next 5 years? And how is the, commissioning of these beds going to happen? Is it going to happen in a linear way? Or let's say it's going to get bunched up in certain years and certain years will be very lean? And how much of money will you require approximately for this aspirational number of beds, the number that you have in mind?
most important thing what we understand is that even as on today, 81% equity is with me. Yeah. And we want to continuously keep our ROE and ROC higher double digit. That is the most important part of any and every business. It is my fundamental understanding, not the number of beds. Okay. Number of beds can be in 5 years, 5,000, maybe 2,000, same. But we should be able to continue growing our top line and our EBITDA margins, our EBITDA, keeping our margins intact. We don't want to grow at the cost of our margins and return on our equity and return on our capital. This is most important part as far as I am concerned. And that is how I am working since last 25 years. And that's why, and that's how I am successful in whatever I have created. So I don't dream for beds. I just want good return on money. So it be mine, so it be shareholders.
No, why I was asking this question was because we wanted to understand the operating cash flows and the free cash flows for the company. And in that light, what would be the leverage factor that you have in mind for the company as a whole?
We are today, we have 100 crore rupee deposit and we are looking for some good opportunity. But we are seeing daily 5 opportunities, but everything is not an opportunity. So what we do is we go through everything. We have declined nearly 50 opportunities till now in last 4 months. That doesn't mean tomorrow we will not do anything. Okay. We will do tomorrow something or maybe day after tomorrow and we will acquire because we don't want to sit on net cash situation. We don't believe in that. And we are quite happy to take a debt also.
But do you have any debt is to equity number in mind that for our company, we'll have only this debt is to equity and will not exceed this, or it is also going to be opportunity based?
Well, I would have a good interest coverage ratio 4:1 or 5:1. Then only at that level I will be working.
Okay. And, just because obviously our mature hospitals do generate 30, 35, 36% EBITDA margins and the newer ones, takes 5 years to ramp up and in the interim we'll see actually margin fluctuation. So, do you have any EBITDA margin number in the company as a whole that, on an ongoing basis we'll try to open our new hospitals in such a way that the margin number on the company on an overall basis doesn't dip below a particular number? Do you have anything in that regard?
See, most important thing is that we are able to make our hospitals EBITDA neutral in first year of operations. That doesn't happen anywhere in the world.
Okay.
So our all 3 units are EBITDA neutral today. And okay. it is 6 to 8 months of operations. That doesn't happen anywhere in the world. And that is what is, we call it our innovation in the business.
So, just to continue this question forward, let's say, we reach our maturity in 5 years and our new hospitals earn EBITDA, break even, let's say, in the first year. Then between the first year and the 5th year, how does the margin move, if you could give some highlight on that? So let's say our mature hospitals, if they give us, let's say, 36% EBITDA margins and the new hospital breaks even in the first year, so how does the trajectory between the first year and the 5th year move?
Well, usually what happens is at first year we become EBITDA neutral.
Yeah.
Okay. And between first to second year we remain neutral or positive up to 5 to 10%.
Okay.
Okay. Then the third year is between 10 to 20%.
Okay.
Up to 20%. Third year onwards,
okay.
It goes above 20%, 4th year onwards.
Okay.
So this is how it goes. And the cities like Surat or Jaipur, which are rich cities, Jabalpur is a middle class city.
Yeah.
So I would not say that Jabalpur I will get 30% plus EBITDA margin.
Okay.
But Jaipur and Surat, these are the places where I can say that yes, they are rich cities, people opt for higher level of treatment, higher class, they opt for room and other things. So there the margins are naturally higher.
Okay. Thank you. This is helpful. Thanks.
Thank you. The next question is from Dinesh Pathak from Goldman Sachs. Please go ahead.
Thank you. These 3 units, Surat, Jaipur, Naroda, these these costs were not there in the Q3 of FY18? They only came in FY14?
No, so Q3 they had just started the operations. And initially, what happened was we had started largely with the OPs, the outdoor patient thing, and then gradually the other doctors got added, and gradually we went into the more surgical work and more IP work.
So why is other expense from a 6 crore run rate about 12 crores this quarter?
It's because of addition of number of doctors, because of ramping up of the capacities which we have done in these newer units, and because of which the number of employees also have got added. And that is, all these things put together have contributed to the additional expense.
But that you will put in staff expenses and operating and other expenses. Why is other expense run rate very high?
There is a lot of expense which we have done for branding activities. Any new unit coming up, the initial branding costs are very high because you have to put up all those hoardings, you have to put up those newspaper advertisements, you have to launch the unit also, whereby there is a program which is conducted. So again, there is a cost involved with that. So all those things are what are there in the initial months or maybe just in the pre-launch or the immediate post-launch phase.
Okay. I didn't understand the explanation you gave for higher receivables. So your revenue is up by 60 crores for the year and your receivables are almost up by 30 crores. So 50% of incremental revenue is going into receivables. I didn't fully understand why this is happening.
Jabalpur and Indore, last year, just before last year, we got a permission of CGHS, ECHS because of NABH. So that business just started, and that business of 11-12 crores, and that payment comes late. That business was never there previous year. So that suddenly there is increase because there was no business of that empanelment which came after NABH. So this is a new business which came in, and CGHS, ECHS government payment is 100% it comes, but it comes late.
So for these two payments, CGHS and EGHS, typically what is the receivable days?
So for these two, it even goes up to 180 days, and there is a lot of dependence on the fund flow which happens from the government, and then the allocation happens basis the kind of amount they receive. The allocation happens amongst various hospitals.
And is the mix of this business more in Jabalpur and Indore versus overall company?
So it's not more there, but then all this, what had happened was to get the NABH accreditation in these two units, we had taken a much longer time as compared to what has happened in the newer units. Also, at that time, it was like we had to go for a full NABH accreditation. The norm for there is something which they call it as the entry-level NABH were not there then. So that is what we have got it done at the newer units, and that's where we have the NABH. But for those units, it took a longer time. And in the last year only, once the NABH was there, then we applied for all the empanelments simultaneously. And that is where the empanelments kept coming on at a particular frequency, and as the empanelments increased, we had more number of patients coming in from those corporates in a smaller period of time. So that is what has led to more outstanding. In fact, just to give an example, like BSNL, the outstanding had got increased for one of the units in Jabalpur. We stopped the work for BSNL also, and we could convince them to get it converted on reimbursement basis. So these kind of steps also we do take when we see that the money is not coming in at all. But because BSNL is something which is, when it comes to the payments, it is locally governed. Now CGHS and ECHS is something which is governed centrally, and this is the fate is same or similar for all the hospitals. So we cannot take those kind of steps in these cases. Can you move to the next question, please?
Anyone else who wishes to ask a question at this time, please press star and 1 on your touchtone telephone. Next question is from Aditya Agarwal from InGrowth Capital Advisors. Please go ahead.
Hi, the question is, so CGHS and ECHS as a percentage of total revenues, what's that percent number as of 18? And in 19, what might that be?
So as I told, on an overall basis, 60% is, so it's 21%, yeah. That's what I said, no, 60, 21 and 17. No. So it's 17%, sorry.
17, and is that expected to go up in the next year?
Not really, because a good influx has... Not really, because a good influx came in when we started these schemes. And also, there is one good thing happening there also, because there is through various representations, maybe from FICCI, maybe from AHPI, where we as a hospital are also quite active member. There's a lot of representation which is happening to the government also, and now that the government is coming up with this mega scheme, NHPS, so they have also assured of expediting the payments, and we have seen it happening very recently, whereby the payments are now coming in the electronic, even the bill submission, the queries are coming in the electronic mode, and they are handled by UTI. So there is an improvement happening there, and after still a lot of representations are happening to the government to expedite that. In fact, the government, the topmost bureaucrats from the government also, they also acknowledge that until unless we improve the payments to the hospitals, we'll face a problem while running this NHPS scheme.
Okay, thanks. That's all from mine.
Thanks. Can we have one last question, and rest we can then definitely take offline. The email IDs are there, and we can take the questions later as well.
Sure. Due to time constraints, we'll be able to take one last question. The last question is from Nitin Agarwal from IDFC Securities. Please go ahead.
Thanks for taking the question. Sir, can you quantify what was the operating losses of these 3 new hospitals in the last quarter?
You have the numbers, or we'll have to... Nitin, can we give you offline, maybe in an hour's time after this call?
No.
Sure, we'll do that. We'll do that.
Okay, and what you are saying is these 3 hospitals, the losses that whatever that they've generated in this quarter have become neutral within like in Q1 those losses have almost got nullified.
Yeah, now it has got neutral. That's right. Too close to neutral. Rather, if we talk about Surat, it's slightly upwards of neutral, or Jaipur slightly lower from the neutral, so it's close to neutral.
Okay. And so, sir, on the tax rate, the understanding initially we had was our deferred tax will more or less set off our current tax. So why is such a high tax rate for us for the full year? And how should we sort of model this going forward?
So we explained during last call also that our made credit entitlement, which we did not avail for consecutive 3 years, we availed in year 2017. Post Union Finance Minister extended made credit availment period from 10 years to 15 years. This was one development. And then 35 AD benefit, which we were availing at 150%, it got reduced to 100%. So there had been a revisit to this, that whether this is a permanent difference in taxes or it's a temporary difference. And finally, we concluded that it's a temporary difference which requires parents making provision for deferred tax expense also. So made credit entitlement was done, and then deferred tax expense was also booked, and overall net impact had been reflected. Now in our restated RHP also we normalized it, and when this is first time India's implementation, so we restated those numbers for the respective years. So made credit also and deferred tax expense has been charged to respective years. So both the years number has been restated, and it's result of that.
And so how should we model this going forward now, sir, our tax rate?
So as far as cash flow goes, we would be falling under made rate of 21.34% on our PBT, and deferred tax expense would vary depending on the availment of 35 AD benefit for our new hospitals.
Okay, sir. And sir, on Mohali, by when do you see the hospital getting commissioned this year?
Yeah, so it's happening in the next month, in month of June, we are commissioning the hospital.
And in terms of the operating, do you foresee making operating losses in our hospital in the initial part of the...
So initially, there are two things to it. One is it has been partially operational also because of because we have taken our running hospital. But yes, initially there are losses, and as we have seen in the cities of Surat and Jaipur, we have been able to come out of it in 6 to 8 months' time. So obviously, we look forward to a better performance at Mohali.
And then lastly, what were the EBITDA margins for the year for Jabalpur and Indore for this year?
It was in the range of 7 to 8%.
For both units, sir?
Yeah.
And correspondingly, what revenues would they have generated this year, sir?
What revenues they generate this year? FY19 or
FY18? No, sir, FY18.
18 Jabalpur was 36, 37? 38. Yeah, Jabalpur was around 38 and Indore close to 50.
And sir, and the Ahmedabad units have continued to maintain 35-36% EBITDA margins. The two old units, mature units.
Yes.
And sir, what has been the revenue growth in those units?
So there's not been much revenue growth at SG. Yes, Krishna, there has been growth in the revenue. And because simultaneously all these units have come up, and as we have been talking about that in the initial phase, there is some effect of cannibalization which happens, which stops the growth at the matured units, but then it creates more capacity for more work to be done in one specialty, the joint replacements, and even the other specialties. So they start ramping up again.
So you expect growth to come back to these, revenue growth to come back to these mature units of Ahmedabad in FY19 onwards?
Definitely.
Okay, sir. Okay, thank you.
Thank you.
Hi. Just to sum up, we would like to highlight 3 things. We successfully completed IPO during the year, and we are now net cash. We increased our capacity by 60% to 2,000 beds. Our net block also has nearly doubled. We have also grown our EBITDA by around 16.5% on consolidated basis, despite commissioning 3 new units. So I would like to say that we have potential to grow organically as well as through appropriate acquisition that fits in our strategy to expand our reach and become pan-India player. Thank you everyone for joining the call. Param, over to you.
Yep, thank you everyone. Thanks for participating.